Hi, everyone. I'm Stefan Paterno, and
I'm Sue Devine.
This is our first webinar. It's going to be a little fun. It's also going to be somewhat casual. It's meant to be a little more intimate with just the two of us over here. So this is a moderated webinar, which means that if you have any questions, you should feel free to post them in the chat window. And we've also received maybe a dozen questions ahead of time that people posted, which we will begin answering right after we're done giving this presentation. So since there are a number of you that are new to Syndicate Film Financing, we are going to begin with a brief overview of what Syndicate Financing is, how it works, before we jump into a Q&A. All right, so bear with me as I click through here. So there's a couple real value propositions for Syndicate Financing. The first is it's there to either help you raise money if you're looking to raise money from scratch for your film, or for many existing production companies that have already committed financing to a film, they may want to diversify and lower their risk by co-financing or syndicating the risk with other investors.
And I assume everyone can see the presentation, right? If you can't, please let us
know. Yeah, if anyone's having a problem, just please write in the chat window. We have a moderator here with us who can help sort out any technical details. So first off, some good stats to know is that all the films listed on Slated attracted over $320 million last year. And most investors we know are looking for high scoring projects. Now, high scoring is a term that we have coined at Slated because of our scoring system, but it is reflective of what people in the world are looking for in terms of projects. Now, the typical top questions that people ask are, well, who's in the film? Who's making it? How good is the script? And will it make money? Those are the four most common questions that everybody always asks. And so we designed Slated to answer those questions at a glance by developing something called the package score. And the package score shows you instantly the overall value of the project, how it ranks in the current marketplace with a percentile ranking, as well as what the team score, script score, and financial scores are. Now, the way we've been able to do that is by providing standardized team analysis. As you can see here in the screenshot, this is how all film profiles look on Slated, for those of you who already know. This is going to be very familiar. For those of you who don't know, the idea was to make it as simple as possible to browse film to film to film, just like shopping for a book on Amazon. You can always know where to look to see the average review of a book on Amazon, and we wanted to make it that simple to look for a standardized team score. As you can see here, individual people on a team have a little score, which is what's in the little orange box on people's profiles, and that it adds up to the overall team score. We've also standardized the process of script analysis, whereby we have a team of readers that have been trained to analyze scripts systematically across 11 different criteria. All of that information is put into a score box, so you can see the rating by each reader across each criteria. And there are a lot of comments that the readers provide, which you can't see in this screenshot here, but if you were to go further down the page, you see all of the, you see paragraphs of text that describe exactly the reasoning behind each score. Overall, this gives you the standardized script analysis score. Now, we've done the same thing for financial analysis, whereby we analyzed over 10,000 films over the last 30 years and discovered what are the clusters of performance that occur that become predictable. And we have productized this service so that any producer can now go and get their project quantified financially. How much money is it likely to make in box office versus television versus home entertainment? So the way Slated has worked to date has been that it's a completely self-service solution. You set up your film for free. Now you have the option to have your script and financials analyzed for a fee. Otherwise, once you list your film, you are discoverable by the investor community, by other talent, by sales agents, by distributors. And as they discover films that they like, they message the filmmakers. You begin your interaction with anyone that's messaged you, and you're free to go and close your deal. And Slated has never really been involved in the closing process. We've never taken a fee either. So that self-service solution still exists and hasn't changed at all. However, now we offer a full service solution for projects that score over 60. And what happens is that we will see when a project scores over 60, it appears on our radars, and we will then be in touch with the filmmakers to see if they would like to have full service syndication, whereby we will then activate the entire Slated investor network and facilitate the interactions with the investors and the filmmaker. Now, Slated Advisors, which is part of the Slated family, is an exempted reporting advisor, and we are there to assist the entire process, which is to say, setting up the fund, helping coordinate with a syndicate lead if there is a syndicate lead, or working directly. Looks like my video cut out for a second, but it's back. To help funnel in all the investors into the fund. So a fund can hold up to 100 investors, but we want to make a filmmaker's life simple. I don't think a filmmaker really wants to deal with 100 individuals, so they will deal with one representative. That would be Slated Advisors or the syndicate lead, working in tandem with Slated Advisors. We will also handle all of the back office, accounting and legal work related to setting up the fund and sending out the K1s when K1s are due. So we handle all the headache for you. So this is just somewhat of a repeat, but with more detail, that we will provide unlimited customer service to help out the filmmaker who's raising the money. Single point of contact with the investors. There is actually no cost to the filmmaker at all. So if you bring a great film to us, that's huge value to Slated. So there's no fees to you. Instead, the investors are essentially paying a small fee above and beyond their investment for us to manage their fund. The minimum requirement is that you be raising $1 million and that you have at least a financial score of 60 on top of your package score of 60. The reason for the 60 is because that's statistically where we've identified that your likelihood of a return being positive changes over. So below a 60, we've estimated typically that the film will likely lose money. Now, we've had a launch partner when we started. AG Capital is a production financing company, and they were looking to diversify their risk by lowering the amount of risk they have on any given one film and being able to invest in more films instead. And they were looking to do this by syndicating through our system. They had a secondary goal, which was that they didn't want to staff up with an army of development executives looking at all their material themselves. So they leaned on Slated to do all the scoring for them and help identify which projects would be ones they want to get behind. They have a significant fund that's ready to deploy capital. There's already a couple of projects on Slated that they are backing and syndicating, which we will soon begin syndicating for them. So they're using our scoring system. They're efficiently able now to go and look through thousands of projects on the site, and the more projects that get scored and score above 60, the more of those projects they will be financing. Now, this is an example of a project that is on the site right now that essentially is going to be the first deal that's getting syndicated. You can go and find it on the site if you go and browse it right now, but this is just to give you a quick overview of what it looks like. And that really concludes the presentation portion of this. You can go on to Slated to learn more about syndication by going to slated.com/syndicate. And there's a video and there's FAQs. And if you have more questions, of course, you can reach out to us through the site. Okay, so some questions are already coming in. However, before we dive into that, we want to first answer some of the questions that were sent to us ahead of time. So our moderator now will start posting each question one at a time.
Well, and one thing I can say about some of the questions that had been asked, and if anyone is thinking of asking questions in the vein of what you might ask your attorney or your accountant, Slated does not give either legal or tax advice. So any questions related to those issues, please direct that to your attorney or your accountant.
Yeah, so one of the first questions, in fact, is such a question. Oh. What steps can lead a syndicator to reduce the risk they get stuck with too much exposure? And again, I mean, Slated is a discovery service to help you find films that you might want to invest in. It's really there to help you triage through the thousands of potential projects. But ultimately, the decision of whether to invest in film or not and risk mitigation strategies is really something for each investor to develop themselves and to work with their financial advisor. You know, the rule of thumb in any asset class, of course, is if you're going to go into something that certainly that you're not an expert in, but even if you are an expert, is to diversify. So if you decided you want to invest in film no matter what, my recommendation would be diversify across many films, especially as you start out. You have no idea which ones will be financially successful and not. So let's get the second question posted in there. Okay, will Slated make simple syndication paperwork available so projects creators can have more? Well, I'll let you guys read it. I'm not going to repeat the question. Well, no, so in the short run, only deals that we choose to syndicate and that are eligible will see the paperwork. A lot of this is being done online and offline. Since this is the beginning of syndication, we will be especially working closely with the filmmakers. None of this legal work will be exposed online. That said, in the next year, we plan to standardize and automate more and more of the actual fund creation and fund documentation process. So sometime in the next year, you will see a lot more of the standardized legal work appearing online for anyone to browse. That's setting up a deal. And the purpose of setting up that transaction engine a year from now is to make it efficient enough for anyone of any raise size. So if somebody's raising $100,000, they'll be able to do it efficiently. Right now, because of the human component involved in doing a lot of this, is why we have some of these minimum requirements. But no. So the answer to the question, the legal paperwork will not be online in the short run. Okay, so so this is actually talking a little bit about deal structure, which we don't really address. Every film deal has a different financing plan, different amounts of equity versus different amounts of debt. As far as what the fees are, Slated is charging a 5% fee to the investors. So 5% of what they are investing will be charged to the investors, and there is also a 5% back-end participation once investors have recouped 120% of their money.
Well, and I think the key with that too is to realize that whatever fee Slated takes is related to the fund that is set up, and by fund, it's a fund specific to each individual film. It's not a slate fund. So it's not, those fees don't sit in the waterfall, those fees don't go into the production budget. They're literally part of the fund. When the money flows from back to the investors through the fund, that's where the fees are addressed on that end. So it's nothing that the filmmakers have to concern themselves with.
Yeah, and just in case I'm understanding that second part of the question properly, explain equity allocation to investors versus retained by producers. Again, that's not something that Slated decides. This is sort of typical. It's a negotiation between the filmmakers and that syndicate lead. Or if the financier of a film is just syndicating their existing risk, the terms that the fund gets are the rights holders' terms. So the terms get translated along over to or mirrored for the fund. And typically what we know in the industry is that there's a 50-50 split. Once all of the fees, the money taken out from the theaters, the distributors, any marketing expense has been reduced, whatever that sort of net resulting revenue is usually split 50-50 with the producers and the investors, usually after the investors have recouped fully their money. Then there's a split of 50-50, but Slated is not involved in that process. Every film has its own particular terms. So what's the next question? Okay, so back up to the top. Came exclusively from Slated versus private investments reported Slated from elsewhere. Well, that's a tricky question. Often filmmakers will find investors on Slated and not even report it back to us. So we don't actually handle the money. We don't touch the money. So we don't have the ability to know what came directly via Slated. We know from countless films that have reported to us that they found investors through Slated, but it's the 322 million is from all sources. So similar to how crowdfunding sites work, people use our tools to reach out to their own networks. I would say the vast majority of the revenue is using our tools to find, to leverage and bring in investors from people's own networks. And a more minor part is from investors they've never met before who have simply requested introductions to them. So it's maybe a little different from crowdfunding, in that crowdfunding typically 95% of the funds you raise will be from your personal network. Here, there are professionals looking for films, and those are not people you're going to know. And so there are some films on the site that have found the vast majority of their equity financing or their debt financing or distribution pre-sales from people they didn't know on the platform. So who sees the standardized script score and other scores? So the scoring is entirely controllable by the filmmaker. So the filmmaker can list their film. That listing your film is free. Getting your team scored is free. Seeing all the people scores that's all done for free. And you can control whether you want your film profile visible to the entire community or just to investors and select individuals. The script score and the financial score also have more granular controls, so you can choose to have those scores be visible only to yourself and your team. You can also choose to have it visible to anyone that you're looking for on the opportunities tab. So if you specifically say, hey, I'm looking for equity investors, I'm looking for executive producers, I'm looking for sales agents, you can make it visible just to those people. Or again, you can make it visible to the entire community. All the films that have been scored on our site now have different settings. I think most people want visibility throughout, especially if they're proud of their scores. They want everybody to see it because sometimes they're looking to attract new talent, and you never know what new talent might emerge because they love your script score, for instance. And then some people have kept some of these things a little more confidential. So it means that people can't really see at a glance how your project performs, and they have to request access. So whenever you see a little request access button, if you're an investor, that's how you get free access to the score that's been run. Outside of the syndicate, so again, if I understand the question correctly, for all films that don't score over 60 and that are not officially being syndicated by Slated, you're really self-syndicating. And that really means that you are interacting directly with the investors and you're structuring your own deal. So if syndication really is a process of bringing a pool of investors together, what we're doing is we formalize, on our end, we formalize the structure, the fund that's going to hold up to 100 investors. And we only do that for films that we know are raising a certain amount and over a certain score. Otherwise, you're really on your own doing it. And all that money that's ever been raised in the last 4 years has been done that way, where you're setting up really your own terms. You're talking to investors. The investors are having to negotiate with you directly. So there is no official fund structure being created by Slated for you in that case.
I don't know if that also is related to possibly a film coming in with some investors already. And so those investors could always go through our syndicate if those are funds that have already been raised and they're being put to use by the film, or if they're sitting in escrow for the film and they don't want to come through the Slated platform, but you still are going to be part of a syndication on Slated. All we would need is evidence, third-party evidence that those funds exist for that project. So someone couldn't just come to us and say, oh yeah, we have X dollars sitting there without giving us evidence for it. So that would be the requirement if in fact that's what you're asking, if you already have some outside investors.
Okay, another question here. Who owns the work product presented? Well, it's really the filmmaker. These are reports. I mean, to the extent that you're asking who owns the website, the page itself, of course that's Slated, but the material, the content that's in there is completely controllable by the filmmaker. If you don't like the reports, you can hide them. You can also reorder new reports if you want to have them done, if you've reworked on things, but you control the visibility of it all. If you deactivate the film and hide everything, it stays deactivated and hidden. You can't export it. I mean, you could, if you really wanted to, copy paste the report and put it into a Word document and use it that way. But for the purposes of our community, you own the reports, you control the visibility to them, but they stay on the Slated site, essentially. So believe it or not, we actually went down the road of becoming a registered broker-dealer, not because of the Jobs Act. The Jobs Act actually is to free you up from having to become a broker-dealer, but the Jobs Act in itself is so burdensome. The costs, the reporting requirements, yeah, all of that is so expensive that it turns out that the Jobs Act is only really great for larger companies that are really looking to raise multiple millions or higher. And then there's a lot of requirements. So what we've decided in becoming being a broker-dealer, which is very restrictive and countless ways is we became a exempted reporting advisor, which gives us a little bit more flexibility. We still need to adhere to all the strictest and highest standards, but it's more flexible than the Jobs Act. It's much less burdensome to the filmmakers and the investors, and it gives us, well, we've really created a new way of doing things. Now, for those of you who are savvy in the tech world, there's one other company doing it this way called AngelList. And for full disclosure, I happen to be an investor in AngelList because I believe that what they're doing is phenomenal. But AngelList has really pioneered this creation of these syndicates that can hold 100 investors, that work in a very specific way that is permissible. And we've decided to emulate that. We've worked with the same lawyers, but we've taken it even further with some of the capabilities of what we're doing. And that has really made things very flexible for us. So we're going to see over the next couple of years how things go. But I hope that answers your question.
Well, and in regard to your unaccredited investor point, we will not be working with unaccredited investors. You must be accredited by the SEC definition.
Yeah, and there's a real rationale behind that. Unaccredited investors, and especially unsophisticated investors, they are going to be the first people who, throw money at something that they don't understand, and the likelihood of them losing their money is going to be a lot higher. So it's not just about accreditation, it's really about sophistication. Accreditation happens to be the first barrier, and it's not a very high threshold. There's a lot of people. I mean, as far as the official US statistics are, somewhere north of 9 million people in this US qualify as accredited. But we actually, especially in the early days, want to deal with investors that have a little bit more sophistication as well as possible, as it mitigates the likelihood of somebody making a bad bet or not understanding what's going on and being burdensome or confused about the process. So,
and we will be insisting on verification. There's a process that's required whereby investors will have to actually verify beyond their self-verification that they are accredited through documentation. So
yeah, there's also a background. There's also a background check being done on the investors, to make sure that there's no history of fraud, for one. So sort of a bad actor check. Script and financial scores as the project evolves, attachments are added. Okay, so we actually are in the process of building a new capability of our analysis tools so that you can reorder your script analysis, you can reorder your financial analysis and save these different versions, as well as we are going to be in the process of building the ability for you to add simulated team attachments. Now, I'm sort of revealing this very, very early days. This has been just discussed internally and is being spec'd out. But we've had so many customers say to us, it'd be great if I could just simulate attaching various key people to see what my team could look like and run a financial report to see what the potential would be based on these simulated attachments. That is such a popular feature request that we definitely are going to be building that. It will take us a couple of months, but it'll make simulating very easy and reordering these reports very easy. We don't know yet. Our goal ultimately is to have a real-time simulator, so you can just plug and play and see charts moving up and down in real time. But that is more of a version 2 for next year. What we're talking about here is more of a shorter-term reordering capability. So MediaVest, I do know, Media Society, sorry, I do know their team. And from my understanding, they've created a subscription service where investors pay an annual subscription to be part of a club. And then they bring deals. So they're more of a traditional production company. They are cherry picking individual films, and they make those films available to their subscriber group. And the subscriber group can then decide what to invest in or what not to invest in. Slated is just an open marketplace where over 200 films a month are getting listed and getting scored. And so we now have somewhere north of, I believe, 4,000 or 5,000 films on the site. And it's really there as an open marketplace to help you discover projects, find talent, find financing, get your film sold and distributed. It's a more broad and vertically integrated marketplace. In some ways, it's like a virtual studio, but it's really there to help everyone in the industry connect with each other, connect with projects, connect with financing and talent, etc. Our syndication service, though, is the more structured part that we're putting together. And again, there is no annual subscription to be part of Slated. It's entirely free for everybody, and it's really us only getting paid for performance. If we find something good and we bring the investors to it, we then take a performance fee. But there are no upfront subscription fees. Well, so how do you quantify? So, okay, this may not be answering the correct question, but how do we quantify actors, first of all, whether they're interested or not? Well, that's based on our scoring system. So all people on our site are scored based on their current market value. But I'm guessing you're asking something a little bit more nuanced than that. How do you quantify those who are interested but aren't allowed to be attached? Well, that's where our simulator will let you attach a simulated attachment. So if that person has told you, hey, I'm interested, you can attach them, you can simulate their score and run a financial projection, and if everything's looking great, well, that will allow you to attract investors. Now, the investors will be notified on the financial report that that's a simulated attachment. So they will know that there's a risk, and the risk is that that actor doesn't commit. So if you get the money, and the money, if it's being syndicated by us, it's all being held in escrow, well, then you've got to get the actor then committed and attached before the funds will be released from escrow. If you're not being syndicated through Slated, then again, the only way you can attach the actor to your film profile will be for you to get a confirmation from the actor or the agent. Now, if they're really interested, there usually isn't a problem. There's a lot of films on our site with notable A-list talent that have confirmed their attachments to films that aren't financed yet. I'm not going to name all those films for you, but they are there. The agents have confirmed their attachments. So agencies are now becoming very familiar with confirming Slated attachments. Many of them will do it. If they don't do it, it's maybe because they don't feel comfortable enough with your film. But everything we've built is to help you put your best foot forward and convince investors to get on board. So the simulated attachments thing should really solve that problem for you. Yes, so actually that's another problem that, another challenge that we've had all along is that we've only been scoring people for film. The good news is we will soon be scoring them for television. I don't think it'll be rolling out this year, probably early next year. But we've already set up this is probably a little too nerdy for you guys, but we've set up the database systems, the plan, we're importing all the TV data. We're getting it from more than just one source. There's a number of sources on the internet that provide various film and television data. So we're collecting it all, we're cleaning it up, we're making sure it's all structured correctly. We've already developed the algorithms for scoring television, and we will hopefully be rolling that out early next year. Oh, no. So absolutely not.
Absolutely not. We are not. It's a tool. The financial analysis is a tool.
It's really a probability thing. It's impossible for us, no matter how good our algorithms, to guarantee an ROI. So the tool we provide is simply an overall, the score, for instance, is a probabilistic likelihood that the overall film will see a positive return. That doesn't even account for where you sit in the water flow of potential revenue. I mean, every deal is different. So if you're the entire film owner, your return profile is going to be different than if you are a minority holder sitting under layers and layers of debt. So it's impossible to know what your ROI could be. You might make a $10 million film, but sell it to a distributor for $1 million. And then it may turn out that that film goes and makes $1 billion at the box office. Well, that distributor is going to be very happy, but it will probably turn out that your return profile is vastly different than the overall film's return profile. So the scoring is purely a probability, and we've determined that scores of 60, financial scores of 60, are where it tips into the favor of a positive return, and below 60, negative return. And so the higher above 60, the higher the probability of a positive return. But again, there's no guarantee of the return. Each deal structure is different. Where you sit in that waterfall of revenue is different.
And just like anything else, it's just a threshold. You still, every investor is responsible for doing their own due diligence on a project. All the analysis services are tools, and they're tools that people can choose to use or not use in their analysis and their due diligence. It's by no means comprehensive, and investors are responsible for doing their own due diligence on a project just like they would in any instance or situation. And the 60 threshold for syndication is just, it's a start. There's still analysis and diligence that has to be done that could preclude a project from going through syndication. It's not a guarantee.
Are there fees for filmmaker regarding various analyses? Yeah, so the,
Cost
well,
of the analysis.
yeah, so running, so again, joining Slated is free, listing your film is free, networking is free. If you want to have your script analyzed by our team, that's $395. That's where there is a team of 4 people, 3 readers and 1 supervisor who work on the project through this sort of standardized analysis process. And if you want a financial analysis done, you can have that done as part of the bundle where you're having the script and the financials done, and that is $995. Now, the reasons that there are fees for those is because we have real hard costs. There's a small army of people that are deployed who go and analyze the script and the financials and put it all together. And there's a huge research and development expense that we've already spent building this entire system. We've tried to make it an order of magnitude cheaper than consultants that you might be able to hire, because our goal here is to make this accessible to everybody. Not everybody can afford the $20,000 to $250,000 fees that expert consultants choose, and these are fees they charge studios and production companies. So we decided, let's make this accessible to everybody. It still has a cost to us. Slated doesn't really make any profit off of these things. I mean, they're barely a break-even proposition for us, but they're there to help you get your best foot forward in front of the investor community. They're there to help grease the rails and get the investors excited. Where we will actually make our revenue is from successfully helping finance your film. And if the film is profitable, that's a little cherry on top for us. So we have all of our incentives completely aligned with the filmmaker and the investors to make a positive return. So further down the line, will you be publishing track record metrics to demonstrate how accurate your predictions turn out to be? And also perhaps the tracks, the ones that got away, absolutely. We're actually doing that already. So if you go to slated.com/analysis, it's either analysis or analyses, that's where you can look up these 100 sample reports. Obviously, we have a lot of internal data that we look at, but the 100 reports, we had ran prediction analyses on all those projects. And granted, most of them were done after the film's performance, but we went ahead and just plugged in the data that was there, even if the films, and pretended that we didn't know how they had performed. And as you'll see down the list of 100 sample projects, there are plenty that we're off on. In fact, on any one film, we can be totally off. We could be dramatically under, dramatically over, and in many cases, it so happens that we're very close. So I would really want to state again, on any one film, you need to do due diligence because there is no guarantee. There's a lot of variables that we'll lay out in these reports, and a lot of those variables, if they change, if the film team gets a different team on board, different distributor on board, or releases it at a different time frame, or the budget changes, their marketing is different, that changes everything. And so our predictions are really based on a very stringent set of potential variables. And then we show you the potential range of sensitivity analyses of what would happen if it was less money or more money or a different team and what the outcome could be. But again, it's almost impossible for a filmmaker to deliver exactly on all these variables that are estimated. So our system becomes more and more accurate the broader your portfolio. Again, if you want to lower your risk, diversify. And as you'll see from the sample 100 report, if you scroll all the way to the bottom of it, you'll see that in the aggregate, where we did estimates that showed 10 billion in revenue, it turns out that the reality is it came out with 11.5 billion. So we were off by about 15%. And we typically, it looks like we underestimate by 10 to 15%. So the more you diversify and the broader your portfolio, the more accurate our system is. So yes, and so as far as publishing future metrics, absolutely. We haven't published some of the successes that have occurred. One of the more successful outcomes was one of the first films that was listed on Slated called The Way, Way Back. And The Way, Way Back got quite a bit of interest from our investor community. However, they ended up closing a deal with an investor they had already found off of Slated. So we got none of our investors had the pleasure of getting into that project. But based on the budget that they had and the sale that they made to, I think, Fox Searchlight at Sundance 2012 or 2013, those investors made a really nice return. They at least doubled their money plus whatever they got out of the theatrical performance. But again, we didn't publish that because our investors didn't get into it, and this was also before we had our prediction system set up. But we will be doing it as we go. The problem is we now have to wait 1, 2 years or more for these films to perform. How do I get around the lack of TV consideration until that goes online? So this is basically, you have to do what you've been doing traditionally, which is you have to pitch and explain to prospective investors that you've got some people that are great in television. And as a lot of industry veterans will tell you, that doesn't necessarily translate. Somebody who does well on TV doesn't mean anything similar in film. And that's why we can't make a direct translation. Somebody's on a winning TV series is the same as somebody who stars in a billion-dollar box office film. It just doesn't work that way. A lot of TV stars don't have the same fan bases that will activate for coming out into the theater. So it's, you're going to have to do what people have been doing on Slated for the last few years, which is you can attach these people, but you're going to have to explain to prospective investors that these people have a lot of TV awards. So if you have Golden Globe nominees or winners and Emmy nominees or winners, they will have a award score. Not the full score of all the television credits, but they'll still be on the radar. Yep. Okay. Are there any sample films you can include on the analysis samples where the script score is under 60 to see what a negative report will look like? Okay, so that's a broader question. We don't provide comps yet, but in the upgrades we're doing in the next couple of months, we will be providing comps. It's been asked by so many people for us to provide comps that we will be doing it. And yes, the reports, even if your script score is low, it doesn't mean you're guaranteed to have a bad financial report. A financial report is largely based on genre and keywords associated to your script, and whether you have a very tight budget or not, and a team on board that supports that. I mean, just think of the number of films you've seen released at the theater, some of them by studios, where you think to yourself, my God, that was such an awful film, and who approved this script? Well, clearly there's bad material out there that still gets the marketing muscle and the team behind it that can make a difference. So our financial reports, although they are dramatically affected by script score. Okay, fine, sorry, I'm going to read here. I think you misunderstood the question. On the analysis samples, there are no films listed with low script score. Well, the challenge is that most films that have been released have script scores over 60. By the way, just to be clear, script scores just over 60 aren't good. We actually, there's the tooltip in the script analysis, on the script analysis report, will show you that these are commensurate with letter grades. So think of something in the 60s as a D, and in the 70s as a C. Most films, the average of the 100 film sample set that we provided up there, are scoring in the high 70s, a C+. So it's actually very hard to score below a 60. It really means that it's an incomprehensible script that barely makes any sense at all. So if you write something even modestly well, you will score over a 60. Getting over a 70 is challenging. Getting over an 80 is very rare. Very few of those films in those 100 are scoring in the mid or high 80s, and only 2 or 3 are scoring in the low 90s. So, to answer your question, we're not going to find any released films we can analyze that you will have heard of that score below 60. Those are films that just don't get made, period. I hope that answered your question. Okay, there you go. Thank you. So the script analysis is purely based on what's on the page. They will provide metadata. So when the report is written up, there will be metadata provided. And what I mean by metadata is they'll extract keywords that describe the film. They will add the descriptions of the period. Is it contemporary or does it take place in some other era? They'll describe also the locations. They will add in details of who the ethnicity and age and attractiveness level of the lead, if it's clear who it is, or it won't be listed if it's not clear. And they will put down what they estimate the budget, whether this is a film that lends itself to low budget, medium budget, or high budget. However, the reviews of the quality of the script have nothing to do with the budget, nothing to do with the attachments, and nothing to do with the financial projections. In fact, that's the same. We ran our team, the script analysis on all of these released films. We had our team members read. So we have about 25 professionally trained readers, and we had different readers read different released scripts of released films, and made sure that they hadn't seen the films then question that they were analyzing, or if they had to ignore everything they know about the film, you know, whether they like the score, that they like the cast or whatnot, and just look at what's on the page. And that's why some of these films that did really well at the box office still got low script scores. So it's all about the page. Our readers are trained specifically to ignore everything else. And that's why this has been done over 1,000 times, by the way. So the system that we used has had 1,000 customers go through it, and it has a 99% satisfaction rating, which is, I think, pretty unprecedented. It's because of the level of objectivity that our team provides. And by the way, this is done as a double-blind system where our readers don't know who the filmmakers are who are submitting the script, and the filmmakers don't know who the readers are. So there is no selection bias going on. Okay, just a note from our moderator that in case you didn't know, this whole webinar, including the questions that are scrolling through, has all been recorded. So there will be the replayability of this whole webinar, which we will make available on our site or on our YouTube channel. And so you can, if somebody's missed out on this, you can watch this. If you want to see all the questions that came scrolling through that you might not have seen, you'll be able to replay this at any time. Yep, so we don't want to take up more of your time. Hopefully some of you got answers to the questions that you had and that we didn't take too long to get to them. But we will be doing this periodically, if not regularly. And we will open this up. This was done to a selective group of our members. We didn't announce this to everybody because we didn't want to overwhelm the system this first time around and want to make sure we got it right. So it's possible that next time you join us, there will be a lot more attendees coming in. So thank you for joining us.
Thank you.
And maybe see you next time.